Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, November 11, 2014. Today is Veterans Day. The bond market was closed. I want to give a shout out to any veterans out there. Thank you for your service. You're all heroes, and we appreciate everything you do. Since the bond market was closed, the stock market was relatively quiet, and most of the stocks and most of the markets really didn't move that much today. There are some movers, but for the most part, it was a nothing day. So we're going to make this video a little bit shorter than normal, only because of the lack of activity today in the markets. So where are we? So here we are in the SPY. This is the daily chart, and it was another, slight grind higher today. I would consider this a flat day. The S&P was up almost 1.5 points. There was nothing going on. It was the lightest volume day we've seen in a long time. On the Spider, it was less than 55 million shares, which is no volume. So that's why there's really not much changed since yesterday. And yesterday I told you that my E-mini contract, I had a target of 2050. Really, it's 2052 is really the number. And today we got up to 2039 in the E-mini, I believe was the number. I'm just double checking that on another screen. Just bear with me a second. I want to give you the proper information. And okay, here we go. And it was high 2039. So we can still spike up tomorrow and achieve the 2050 to 2052 area. And it's actually setting up to, it could be one of those days. So let's say we did get up to 2050, 2052, and we reversed lower on any kind of volume. That would be considered a potential reversal day, and maybe we see a week or two of downside pressure in the market, and that's basically all we're looking for. So, but with light volume, you hardly ever see a down market because there's nothing to push the market down, and the light volume actually floats the market higher. So that's what we've been seeing over the last several days, really since about this area here. Light volume, you see the volume started dropping off right in at this day forward, and it's been lighter and lighter every single day since then. Really, since here, light. So that's what we're looking for. It remains to be seen if we'll see it, but I think we will. Tomorrow is actually should be a bona fide turn day in the market. We'll see how it plays out. They don't always work out, but I have tomorrow as a turn day, and we'll have to just wait and see what happens. Usually there's a catalyst. Can't tell you what the catalyst is going to be, but nevertheless, tomorrow should be a turn day, but never know. Okay. Before we move on to another market, let's just discuss if we did get a pullback and it lasted a week or two, where would it go? And at this point, your natural target would be right at this culmination of these two moving averages around 197. Now, in previous videos, I've told you 194, 195, 196 in that neighborhood. But as the market moves up, the target has to move up as well because the moving averages are moving up. So my new first target would be right in here at about, your first target's going to be at 200. That's a natural resistance point. If we break 200, then I would suggest the 50-period moving average with the 20-period moving into it here at about 197. By the time we got there, it could be even 197 to 198. We'll see what happens, but that's it. I don't expect much more pullback than that, but what I will tell you is that can certainly change depending on how we get there, what kind of volume we get there. Are there huge down days, or are we grinding lower like we're grinding higher? We'll have to see what happens when we get there, how we get there. So it's impossible for me to tell you now this is going to be the number. I can tell you this is my target today, but that target can change as we get closer to that. Okay. Let's go over to the gold market and let's discuss a little bit about gold. It's interesting what's going on. The media has written off gold. I've been seeing article after article about all the reasons why gold is finished. You no longer need to own gold. All the reasons we owned gold over the last few years are gone. So there's no reason to own it. Therefore, that's the reason it's going down. That's usually a sign of a bottom, because the media is usually wrong, retail investors are usually wrong, and as a result, it's usually at the extreme, either high or low, they always get either mega bullish or mega bearish. So right now they're mega bearish over the last few days, and that's really one of the reasons why we've been moving higher over the last couple of days, because everybody's throwing out the baby with the bathwater, assuming gold is finished, and hence we've probably made a low in gold. And I want to go over the longer term chart and show you why. Okay, so here you have, this was the high from 2011, okay, and we come down, we make a low, we rally back up, we make a lower high, we collapse down, we go sideways for several months or a year or so, and then we go down again, and you came into this, basically, this is a previous breakout point. Previous breakout points many, many times will be a sign of another bottom or an intermediate bottom, or markets like to revisit previous breakout points. So this is a previous breakout point, and we revisited this number. And the number got down to 1130 in the futures contract, the spot price of gold. And I had told you that my target was 1125 to 1100. That's pretty good. That's close enough. I don't think we got the high volume reversal day that I was looking for. We still may, only it still also may be a bottom in gold. And we may go higher, and we can go as high in gold as 1250 to 1280, maybe even higher, but that's the nearer term target. But that would take several weeks or a couple of months to play out. And there would be choppy getting there, and there would be down days and up days and down weeks and up weeks. But nevertheless, that would put us into this 115, 117, maybe even as high as 118 area. We'll reassess when we get there, and we'll take it from there. So unless we see a real downswoon in gold, that's what I'm seeing near term, until further notice, until we see the market do something else. And if we do, I'll talk about it here. Let's go over to the oil market, and here's the USO chart. And again, there's not much going on in oil. Oil's been a lot weaker than gold. Oil has been relatively weak, and the price of crude futures is at $77.50. And I still think we're going to go back down and test 75, 74 one more time, and then I think we'll put in a decent low and then rally back up over 80. Don't forget, you have the winter season coming up. And so the demand for oil in order to heat our homes in 2/3 of the country increases. Therefore, when the demand increases, the price normally increases. And we usually see higher prices throughout the winter months. And that's what's coming ahead of us. So it makes sense that there should be some kind of an interim low in oil, and then we move off that low in throughout the winter season, and then we'll take it from there. But right now, I still think we go down another couple, $3 in the price of crude oil and go back down to 74, 75 before making any kind of a move substantially higher. We have to get over 80 for that to get higher, and that represents this level here at about $30 and a half in USO. Until we can close really below this candle here, and the high in this candle is $30.72. Until we can close below this candle on a daily basis, there's nothing going on in the price of crude oil. It's kind of, unless we close here, it's no go. And that's basically all I have in the price of crude oil. And that's really all I have today, folks. Not much going on. Tomorrow should be a much busier day with all the markets back open, meaning the bond market, and that's about it. So I'm David Frost. Happy Veterans Day to all you vets out there. Thanks again for your service. This has been another episode of Common Sense Market Analysis. Thanks for tuning in, folks.